this will go straight onto the mentorship portal after, so you guys can obviously watch these when they've happened. So we have had a bit of a rubbish time of it in the last couple of days. The reason is just the start of the year. Okay, price action on some assets have been really good, some assets have been really bad. So the purpose of today is to try and introduce you to something. Now, bear in mind, guys, I don't know what your experience is. I'm kind of assuming, you know, we're at the beginner-ish type level. I know some of you have got a good understanding. Some of you have got, you know, a really good understanding. Some of you are complete beginners. We're all, you know, wherever we are. And there's certain terminologies that, not that I've kept from anyone, but I haven't mentioned this in the Telegram group or the TikTok group or anything like that when in regards to when I'm talking about liquidity. And that's not because I was, you know, purposely hiding anything or anything like that. I mean, you probably would have heard the phrases of what I'm sort of going to talk about and things like that. But this will really help to change your guys' results, and it will really help you understand liquidity a little bit more. I feel it will anyway. I mean, when I was kind of introduced to this way, it was really, really quite a massive game changer. So guys, obviously the chat room is there. If you have any questions or anything like that, you know, please feel free to just pop them in. And if I see them, obviously, hopefully I'll see them, I'll obviously answer them, do my best to answer them. I'm here for you guys at the end of the day. So, you know, that's exactly what I'm going to do. So, has anyone ever seen stuff like this happen before? What I mean by that is structure here is bullish. Okay, when price is bullish, you expect price to carry on moving higher. So what a lot of people do when they're trading, they obviously need to make sure that when you're trading with liquidity, you're buying low. So you're buying, you know, when it's low at the bottom of this trading range, and you want to be, you know, selling high. Very simple stuff. Okay, so when you're buying and selling, you know, so if price is obviously moving down, it's really important that you're selling when price is at the highs, because if you're selling down here, obviously you're going to start getting stopped out. And I think that's a little bit of what actually happened today in the markets. You know, we were right down here and we were looking for sales, when in reality there was just no trade. There was just nothing, you know, going on, because price completely dumped. But when you see things like this, you obviously want to buy low. But when you see things like what's going on under here and under here, it makes you kind of wonder what's going on. So let's say, for example, this here is a 1 hour time frame, right? And guys, honestly, stay with me on this. If you're getting confused, please ask questions, because I'm here for you guys. Okay, now let's say, for example, you know, we are looking to buy this bigger time frame here will be your sort of daily time frame, if that makes sense. Just draw that again. Okay, so this here represents your daily time frame. Okay, I'm just going to do that in a different color so you'll understand. So daily time frame is the big one, and then what's going on here is maybe your hourly time frame. So, and this is why the daily time frame, guys, is all about direction. This is got to be your best friend, the daily time frame, because what you can identify here is that you want to buy low. But if you want to get into a trade which can literally set you free, you need to be low on the daily time frame here. And looking at what is happening with price action on the 1 hour, we can see we're very bullish. But what we've done now is we're bullish to the point here. Now, when you're buying low in here, you can be a buyer, and you can be a buyer here, you can be a buyer here, you can be a buyer here. You cannot be a buyer up here, and you shouldn't really even be a buyer when you're down here. The reason is because you've taken out the high. You've taken out the high. At the high there is what we call liquidity. Now, with liquidity sitting up there, just going to type that as liquidity. With liquidity sitting up there, you would anticipate distribution above highs. So you would anticipate distribution above highs, just like that. So and you guys, I apologize for my spelling. Distribution above, or distribution when highs are broken. Make that. So you want distribution when highs are broken. You want to look for prices to now come lower. Now, typically, what could technically happen is price will come down and then carry on moving higher. But that's not the point now. We're not looking for that to happen because we've taken that high. We want price to come all the way down here. But what is happening to all these lows? Okay, because this here is a low. This here is a low. Now, this is called internal liquidity. Okay, so your internal liquidity is marked right there. The reason that is internal liquidity is because it's within the daily range. And price has taken out this high here, which is called external liquidity. So above here, what we've got is external liquidity. Because price has taken out on the overall range, taken out the high, external liquidity. Now we're looking to take out internal liquidity. Now, where this becomes important is to do with our fib levels, because we've identified the range. Let's say we've seen distribution above here, and we now look like we're obviously coming down, and obviously we can get sells and things like that. We want to measure the entirety of this range, and we want to note the 50% and below mark. Now, if there's anything below with 50%, where it seems like there's liquidity, that is your internal liquidity you want to target. So let's say, for example, within this, this here is our discount level. So I'm just going to write that down as discount. I have got it in discount area. So there's your discount area. Now we know what the score is. Within discount areas, we are searching for FU candles, IC candles, and imbalances. But it's a bonus if there is internal liquidity to be taken. That is like a bonus thing there. So we can see within the 50% range, within our discount level, we've got internal liquidity. Now let's just pretend there is a candle right here. Let's call this, the area as our points of interest. Now, a point of interest, guys, is literally what it says on the tin. A point of interest is where on the daily time frame I can see an IC candle, an FU candle, imbalance, anything like that. Let's just say I've seen it here. When I notice that there is internal liquidity, you have no idea how many traders are buying here. And they're buying here. And they don't know why they're getting taken out. And then they're buying here. And they don't know why they get taken out. Because it's called internal liquidity. And what happens is price comes into our area where we're searching and then starts accumulating. And that there is us buying when it's low in our area. Does that make sense so far, guys? Are you kind of with me so far? Okay. When price has taken out the daily high, that is your external, and this just isn't just daily. And we're going to go over loads of examples on the charts. Okay, it's okay if you're joining late because this video is going to be recorded, and well, it is being recorded, and then we're going to put this inside the mentorship area anyway. So when you see internal liquidity being grabbed, and you identify your internal liquidity on lower time frames after taking out your external liquidity, and this can be you know, a daily time frame, it can be a 4 hour, it can be a 1 hour. When you've gone onto your higher time frame, you go down a time frame to look for your internal liquidity. Okay, that is exactly what we're looking to do. And that is almost, you know, for a buy model, exactly what we want to do. And then for a sell, I'm just going to invert this rather than kind of draw it again. And I'm just going to change that to sell high. And that there will change to accumulation. And again, apologize if my spelling's wrong. When lows are broken. Okay, so let's just say we're bearish on the daily time frame and we've broken the daily low. We've taken out external liquidity. We can identify internal liquidity. This area now isn't our discount anymore. It is our premium area, because when you're selling, you're looking for price to come into a premium area. And then if price comes into our premium area, this here is our point of interest, where we can identify that we've got FU candles, IC candles in balance, and there's a bonus if there is internal liquidity to be taken. In our premium area, we can identify this area here as a high. That is internal liquidity. Why is it internal liquidity? Because it is liquidity, it is short-term highs within our overall daily range. Why is that a popular area? Because loads and loads and loads of traders that don't know what they're doing are going to be setting sell limits here. They're going to be setting sell limits here. And then price, they don't understand why when price gets taken out. And then it comes into the area we want. This is exactly why we need to wait for reaccumulation, which is here, and redistribution, which is here. Instead of just taking entries, like you could take an entry in, it's the wrong one. You could take an entry in here. That's still the wrong one. Hang on, what am I doing? Short position. That's the wrong way around. I've done it the last because I've inverted the scale. I'm being stupid. So yeah, that there, people take that entry there. And the reason they moan and things like that, why did that take me out? It should have happened here. Well, because the daily time frame is obviously broken structure, because what's actually happened, it's carried on moving. We haven't had distribution. Okay, hopefully that there makes sense. Again, I'm going to save that. That will go straight into our cheat sheets on the Discord and things like that. And obviously this video is going to go in anyway. And we're not obviously done yet, but this is really, really, really powerful stuff, guys. Really, really powerful stuff. And if you've got any questions, obviously feel free to pop them in the chat and things like that. Okay, so hopefully you understand kind of the basics now of what we're looking for. And this can really be on, you know, any time frame. This could happen on the 4 hour, the 1 hour, anything like that. When it happens, just go down a time frame. So when a high has been taken, go down a time frame, look for areas where we can take out internal liquidity. It's just liquidity inside the range. It's going to benefit us because the banks are making money, which means we're going to follow the coattails of what the banks are doing. Now, obviously, sometimes we still lose these trades. And I'm not, I'm not a financial advisor telling you you have to get in at these certain points, but when we get when we get our information and we get price action doing what we want it to do, it obviously works in our favor. That there is our edge. So if we obviously bring that onto the charts, and we'll have a little look for some potential internal liquidity. So right here now, I would still see this area here as internal liquidity. The reason I see that as internal liquidity is because, and you can make internal liquidity inside of a range, by the way. So we've got imbalance in here. That is almost like your internal liquidity, but obviously we're going to call it imbalance. Your point of interest is this area here. So the only reason we've sold off from here, and you would accept sales in this area, is because we've hit imbalance, which is a valid area for us to distribute and go lower. Now, we took out this liquidity out here. That is your external liquidity. On a higher time frame, the reason I've named that internal liquidity is because price came down to this candle here. This here is your low. This here is your overall high. This here is your internal liquidity because it took out external liquidity right here. External liquidity taken, internal liquidity created. This is the low right here. We came in, we mitigated, we pushed up again. Obviously, we're selling off again, but we did call this area out in the Discord group, and we did get buy opportunities come within it because it took out internal liquidity. Hopefully that makes sense. I'm just going to delete all this crap as I draw it. Let's carry on looking. So just looking inside of this area here, did we find any? So potentially, and we'll talk about price action and things like that as well as we go along. Let's have a look. Yeah, S&P, did we find any internal liquidity in there? So, you know, all of this area in here, that's obviously liquidity. The S&P's been really, really rubbish lately. I'll tell you what, actually, we did go, I saw this earlier on oil. Who's the oil trader in here? Look at this. Perfect example. Now, price took out this big high. Let's take this to the daily area. Now, you've got your daily time frame right here. This is your daily drop. Could you show distribution? Are you talking about oil, Johnson's? So basically, guys, you've got your daily time frame. This is your big drop. What you can see here is clearly we've taken out this low right here on EU. Yes, we'll do EU. Don't worry. I'm just going to do this one and then we'll do EU. So this here is your external liquidity, guys. External liquidity. Within here, we measure the trading range. We can measure the high. We're looking for our discount or premium area, it would be, not discount. So we're going to identify this as our premium area. And where are we? Premium area, right there. Within our premium area, we can identify candles. Now we go down to the 4 hour. We're in our premium area. Can we identify anything we can see in here? We can see a huge amount of imbalance right there. We can see this FU candle because it took out this liquidity right here. And yeah, they're the two. So these areas here are valid for being points of interest. Now, why is that premium area? Because look at the daily. So this is your trading range on the daily. Okay, let me do the whole thing again. I'm going to do this from scratch. Okay, guys, so you understand. So looking at structure here, we can see price is breaking off to the downside. Okay, so ignore all this here for now. But basically, this here is your current trading range right there, trading range, and right here, trading range of this area here. Pretend this area here hasn't happened at the moment. This here is your trading range. In fact, let's get rid of that. Okay, so this here's your trading range. We need to identify areas. Okay, this here is the high, this here is the low, or this here is the last high, this here is the last low. In fact, let's bring this up one. So I can then get my fib measure tool and I'm going to measure the trading range. And I need to identify my 50% and upwards range because we're looking for premium levels. When it's bearish, we look for premium areas. Okay, so I can identify that as a premium level. Now I've identified the premium level on the trading range. I can get rid of my fib levels just to clean the chart up. And for the sake of transparency, I'm going to keep the trading range levels right here. Now, you're not just going to set an order, you know, in here for a sell. I mean, you could, but, you know, we're not swing traders. We're looking to get in and out quite quickly. So we're going to go down to the 4 hour and we're going to have a little look inside and we can see certain things. Now, within our areas right here, the first thing, you know, what are we looking for in the premium areas? We're looking for FU, IC candles, imbalance. What can we see straight up inside our premium level area? Well, straight away, we can see this area of imbalance. So I'm going to use that as my imbalance. So that's imbalance, and just above it we can see the FU candle. Why is that an FU candle? The reason that's an FU candle is because it took out this high here, took out that liquidity. It's an FU candle. So that's a liquidity grab. So very, very strong areas. But obviously, a lot of traders are going to be waiting for price to come to here for sell-off. They're going to be waiting for price to come to this high for sell-off. Now, we're not interested in what goes on down here because we're not looking to sell overall until price comes in to our premium area. So we know this is obviously liquidity. It is internal liquidity because it's inside the range, but it's not necessarily something we're worried about right now. Within our area here, we can see there's a high. That there is very powerful internal liquidity. A lot of people are going to be looking at that high, trying to get in for sells because it will be inside the premium area. So it's trapping a lot of sellers into the market to set their orders inside here. So when price comes into it, if I press the play button, wherever that is, we can see straight away. And also what's really interesting, what's happening right here now, we're getting a rejection off this area. This here is a trap. This is manipulation in the markets. The reason it's manipulated in the markets here is because we're at an area where we could easily reject. But the reason we're rejecting is because the markets and the algorithm and the institutions and the banks, the people that control the markets with huge amounts of liquidity, they are trapping people. They're getting more and more opinions in the markets. They're inducing more sellers into the markets. That is their aim here. So many there's millions of people out there looking to trade. 98% of them fail and lose money because of patterns like this. You know, even smart money traders, institutional traders that don't understand the real way of doing it, internal liquidity. This here is really, really powerful, and it's inducing more sellers into the market. So then, you know, look, people think, yeah, great, we're in loads of profit here. And then suddenly they're out of the market. Now what's going on is we have got our imbalance being filled, but more price actions happening. We've not yet tapped our area right here. And we're carrying on distributing. More sellers will come into the market right here. And now what's happening is we've hit our area and we've aggressively sold off. Why have we hit that area and aggressively sold off to the downside? Look at that. We've got more liquidity being built, more internal liquidity being built. That there is the perfect trap. Internal liquidity, because it's still within the range and we're creating it as we go higher. Inside our premium area, we've filled a little bit of, well, most of the imbalance. Price, literally to the pip, has tapped this candle here. Literally to the pip, tapped the candle and aggressively ran off. That is as beautiful as it comes in terms of price action. You're not going to get better price action than what we've seen here. And so many people who think they know how to trade and think they know where they're making money and think they're going to pass their funded accounts are losing abundances of money right here. But these guys up here are the ones making the money. Absolutely stunning price action. But, you know, I don't usually set entries within here. So this would have been an amazing entry on the 4 hour. You could have easily set entries. I mean, right now, if you're floating it around, you're rolled about at a 1 to 5, 1 to 6. If I was to set this, I would do 2% risk because it's a higher time frame. But and a 2% risk would have given me 12% by now. What's the purpose of the 4 hour line? This one here, the 4 hour line is our, so we're identifying the FU candle, TM. So that is our FU candle. That's just to show where the open of it is. And the open is where the orders are in drawdown. So that's where we've reacted. That's why we've reacted where we've reacted, if that makes sense. So, you know, what I would tend to do now, I'd use this area. I would actually probably set an alarm here. And we're now going to have a little look at what is going on, maybe on a smaller time frame. Now, I don't know, actually, look at this, perfect. 1 hour time frame. Did we get anything on the 15-minute? Okay, perfect. So now we can identify what's actually happening. we've come up to this 1 hour area, and what's price action doing? Price action is moving higher, and suddenly we've tapped our area and price has broken structure to the downside. Okay, so now we've got our break of structure. Perfect price action. Now you could do a couple of things here. Okay, you could do a couple of things. You could either wait for price to get up here. I don't know if we did get as high as 50%. So 50% is within the imbalance. But what actually a lot of traders do, and I do this on the smaller time frames all the time, playing off imbalance. Your entry could have literally been that imbalance, because what you've got is redistribution. So your redistribution players in here, you could have set an entry at the imbalance. You would have had a high here. As of now, you'd be up a 3-to-1. Not very good price action in terms of risk reward, because that's a really long time. You know, that happened on the 3rd of January, and you know, to get 3% out of a trade, it's not ideal. Okay, it's not ideal. So we can obviously go a little bit closer. We can note the imbalance. Let's go down to a smaller time frame. And this is just stunning price action, guys. You might have been stopped out just by spreads and things like that, but price action moving down, building, sudden drop. Absolutely stunning. You could have easily, if you'd have got away with it, it might have taken you out due to spread. It may have taken you out due to spread. Okay, or if you'd have had it a little bit higher. I don't know how you guys like to trade. We have got liquidity just here, which is obviously a bit of a danger sign. However, you'd have had to endure some drawdown. If you'd have survived it, you know, right now you'd be up a 10-to-1 if you were holding it as of now. Okay, because we came into the imbalance and price was redistributed again. You know, we can go even further in this, guys. You know, we can go even further. Let's just highlight that. And that's an institutional candle because we haven't taken out any liquidity. So let's just see what's going on a smaller time frame. So yeah, the chances are, you know, price did push a little bit higher. You probably would have been stopped out. But then again, price did what? Price came in, 5-minute time frame. Let's go down a little bit lower. 3-minute time frame. Really nice price action. So if you, let's say you got stopped out here, what could you have done? Because 1-minute or 2-minute structures doing this, look. Moving higher, suddenly coming lower. Now we've broken structure to the downside. Again, what can we measure? Let's measure the entirety of that range. I'm going to use this here as my high. This here is the low. Let's measure the premium area. Let's see what we can find within our premium area. Well, we've got things to get into, and we've got this last, so I'm going to ignore this last up candle here is really small, guys. That's called a doji candle. It's not something you want to be setting entries off of. So the best thing to do is come off of the last bigger up candle. Not this one, because price is actually mitigated into it. So this is the last candle with drawdown. So this here is a 2-minute candle. The open of the 2-minute candle. Within our 2-minute candle, you've got imbalance, and you can already see what's going on here. Price comes straight in and takes you where you want to go. You could easily set your level right there. I mean, if you're holding that, as of now, that is about 12-to-1 as of now. So you could have easily taken the trade up here, you know, wherever it was, and you could have, I mean, you would have been really tight. You just about survived it, and you could have got yourself a really nice trade. If you'd have been stopped out, you could have carried on looking at the pair, watched for price to move. You'd have seen its broken structure to the downside. Just here, that's your break of structure there. We've come in, and also what else do you notice in this premium area, guys? We've got this short-term high here. What can this be classed as? Internal liquidity. what did we do? We took out internal liquidity, we came into that candle there, we filled the imbalance, and we dropped. You've had distribution on the 4 hour,